Hello, everyone. This is Sebastian McMahon from IA Financial Group, and I'm back with another weekly edition of the Economic Review, this time for the week ending September 16, 2022. So another eventful week in the markets. As I am recording this, we're Friday morning prior to market open, but the futures are pointing down for another heavy day. And you already here have the picture after 4 days. So a slight positive for Canadian bonds. Year to date, still deep in negative territory. For equities, the week was tough, especially in the US. And again, this morning, we seem to be adding one more negative percent on top of the picture here. So a pretty heavy week. Price of oil lower, Canadian dollar lower, but the risk off is the tone and the theme of the week, mostly because of this, what you have on your screen here. Inflation remains stickier and more vigorous than expected. So when you look at the headline figure, it did come down a little bit. It has a lot to do with gasoline prices, but beyond gasoline prices, the Federal Reserve, other central banks, they're looking at the stickiness of inflation, at core inflation, at how widespread inflation is. And here, two different ways to look at that. The first one here is the Federal Reserve of Cleveland, one of the regional branches of the Fed. They look at the median inflation. So there's thousands of goods and services within the basket that's used to calculate inflation, the CPI. So what they look at the median, so the middle part of that, and see how is that growing month over month. So how are the prices of the median good rising? And here it's month over month. So it's not year over year because there's base effects. We want to see now, and just in the latest figures, how are prices accelerating. And on the top, you see that it's accelerating still. So month over month, it's growing at a faster clip. And when you annualize that, you still get 8-9%. So the underlying inflation, or let's say the median goods, so the breadth of inflation is rising. And another way to look at that, there's the Federal Reserve of Atlanta, so another regional branch of the Fed. Well, they have what they call the sticky inflation versus flexible inflation components. And if you look at the flexible part, which is in gray, well, it bounced pretty strongly. Again, has a lot to do with the gasoline starting to come off. But the sticky part, which is the most persistent part of the inflation figure, it's still rising, and there seems to be no stop to that. So when the Fed looks at that, of course, that comforts them in their need to tighten some more. So the market was pricing that there would be a pivot from the Fed. More on that in a minute, but that change the mood of the market, and this is getting priced in quickly. And this is, of course, a headwind for markets. When we say headwinds, well, just looking at this picture here, on the day that inflation was published this week, we had the worst performance of the stock market since 2020. So minus 4.3% for the S&P 500. So that was quite a shift. And the reason is that markets now, they are readjusting their forecasts, leading us to those charts here that you've seen in the past. How many hikes are priced by the markets for the next few meetings. Now markets are expecting that rates could go from all the way to we're at 2.5 now to somewhere around 4.5 by February. So 2% more than where we are right now. So of course, next week there's a decision by the Federal Reserve on Wednesday, September 21st. Decision comes out at 2 p.m. Mr. Powell speaks at 2:30. So if you're a fan of macro, you can find a link on the web somewhere. It's easy to find to listen to the press conference. That's going to be an interesting one. Most likely, the Fed will hike by 75 basis points. We could have a surprise of 100 basis points next week. We'll see, but the consensus is at 75. I still think that 75 would be right, but I wouldn't be falling off my chair if we get 100. And this is getting repriced quickly. And the chart on the right is interesting because it shows that the market is pricing 4.5% by late winter, early spring, and then after that start moving lower. And this is not consistent with the message that the Fed is sending, that they will be hiking. They have mentioned a few times that they'd like to reach 4% by the end of the year. Maybe they'll change the message, maybe they'll target something higher, but their message so far has been 4% by the end of the year and stable for a while, meaning likely flat for 2023. And the market is pricing, well, more hikes now, but a quick turnaround after that. So this is not in line with the message from the Fed, and the repricing of all of that could lead to some more volatility. So we're still defensive in our portfolios. We still expect some more volatility ahead. If things change, we'll adjust and we'll let you know. But we remain in the camp that we could be retesting the June lows, and it's not a time yet to try to catch a pivot or fall or catch a falling market. We think it's good to remain on the sidelines with cash on hand and underweight equities. So this is how we're positioned. Next week in the data, we'll have the Canadian CPI figure. So probably the headline will be falling here too because of gasoline prices, but the details will be very important. So we'll discuss that. Retail sales in Canada and in the US, housing starts, the decision from the Fed on Wednesday, which is going to be the highlight of the week. Also have an update on the manufacturing and services sector. Both should continue to weaken slowly. So that wraps it up for the week. ia.ca/economy is your go-to webpage. More podcasts are coming every single week. We recorded a bunch recently, and we're about to go into the studio to record some more. So it's the train that's left the station. So if you want to hop aboard, there's ample material there, and there will be more material coming over the coming years. Economy and Finance 101, new material coming up in the fall. And you also can follow me on LinkedIn and on Twitter. So social media, we have a presence there. So that wraps it up for the week. Thanks for following us on a weekly basis, and I'll see you again next week.